Let's cross now to Stephen Nash from FIIG Securities for the latest on fixed income investments. Stephen, look, what have we seen? Have there been any major moves in the bond market today?
Yeah, well, we've broken through 5.5% on the 10-year bond, and we're getting very close to 5% on the 3-year government bond. These bonds have performed very well in the last month or so. We were up around 5.75 only a few months ago. So what's bad for equity markets is good for bond markets, and I suppose it emphasises the role of bonds. You know, you need some bonds in your portfolio to stabilise the portfolio and balance off that risk in equities.
Now, any new information on bank funding costs, Stephen?
Well, earlier in the week, CBA did a 5-year issue in US dollars. Swap back here, it looked quite expensive relative to equivalent issues for the major banks. I think the reason that they went and did that issue is that they can get the size away in those markets where they find it difficult to issue in $700 million in the local market. We're seeing pressure on the banks from the regulators to increase the length of their borrowing, and we're also seeing pressure from the rating agencies to reduce dependence on foreign funding. So these pressures are building up and causing problems for the banking system. I think there needs to be some change to stimulate the local bond market. I think Cameron Klein was quoted during the week encouraging that, and I think that's overdue at the moment.
Well, what can be done to reverse this?
I think we need some attention to the taxation of bonds versus equities, and maybe some reduction in the taxation of bonds, maybe some look at the taxation of annuities, hopefully reduce the taxation on those particular assets. Also, I think there may be some attention to asset allocation and trying to limit the risk assets in self-managed portfolios and other portfolios to sensible levels, so that people have a good exposure to growth assets, but not too much.
Okay, is there any trend towards longer dated bonds in Australia?
Well, in the last week or so, there's been a tendency to issue a little bit longer, and I think that's partly with a view to satisfying some of these regulatory requirements. The problem is the local market hasn't really been encouraged to change and hasn't changed, so it's finding difficulty in pricing those securities, and I think that's partly why CBA went offshore and did a longer issue offshore. We have a situation where market participants are so full on financial names that we get non-financial names issuing much lower than financial names. For example, Woolworths did an issue this week at around 105 basis points to swap, which is lower than what the major banks trade at.
Look, the National Australia Bank's Cameron Klein made a number of comments at the Australia-Israeli Chamber of Commerce luncheon on Wednesday.
Yeah.
What of what he said did you think was most important?
Well, I think strengthening the local bond market, encouraging a larger participation in the market from local participants. I think that's very important, and I think also we have to encourage the development of a longer bond market. I think the trend is towards longer term funding to reduce volatility of earnings, and I think Australia is way behind the development in that market, and we've got to do something about it, and we've got to do it fairly quickly.
I want to get your reaction to the unemployment, or to the employment numbers yesterday. The headline numbers showed us losing 10,000 jobs, although there were more full-time jobs. What was your reaction to those numbers, Stephen?
Well, what we're really focusing on was the unemployment rate. I think the market was really fearing that if the unemployment rate goes under 5%, there may be more arguments for tightening. However, we've had a lot of very soft readings of late, and I think within that context, the market was primed to not be that concerned. So we got unemployment around 5%. I think that was really a non-event for the market, effectively.
Nash, thank you very much for your time. We're grateful.
Thank you.